As we look to 2026, we see improving fundamentals. We expect the economic environment to slowly and incrementally improve. That's going to help in a number of ways, boosting demand. We're going to see a more supportive interest rate environment. We're seeing inflation begin to settle at lower levels. And all of those factors are going to help stabilise the environment for real estate markets as we look into 2026. There are, of course, risks in the outlook, geopolitical, in particular, policy uncertainty. But when you look at the fundamentals, we see some really positive signs. So when we look at the key themes that are likely to impact real estate in 2026, cost is going to be a major factor. We're still seeing quite a lot of residual high cost impact after that period of high inflation post-COVID, which is settling now, but the residual impacts are being felt in construction economics, in the development pipeline, for example. And we also see 72% of occupiers looking to reduce operating costs as one of their key areas of focus. In addition to that, we expect to see retrofit as a real focus, repositioning of assets, looking at how additional value can be driven by selective investment within the portfolio and within existing assets in an environment where there's less new supply coming through. We also expect to see AI continue to transform real estate strategy for corporates. There's a lot of pilots underway. I think the period of the pilot will really kind of move into an area of trying to define highest and best value with the investment into AI. One of the key factors that shape real estate markets in 2025 has been the re-emergence of the office sector after a period of pressure and a lot of questions about the future of office. Those have really settled definitively, and you can see now increasing focus on the office sector across the globe, but particularly here in Europe. You're seeing recovery in office markets in key areas like London, in the Nordics, and you're also seeing Spain and other markets showing pretty strong levels of demand. We expect that to broaden out as we look into 2026 across some of the other core European markets in France and Germany, as we see those markets continue to stabilise. But in addition to the return of office and selective investment and growth there, industrial and logistics has been in focus quite a lot over the last 12 months. We expect, again, stabilisation and improving conditions and focus on that sector. And of course, living has been one of the key sectors of interest. And although there remain pretty fundamental questions around policy, really opening up the development and growth of some aspects of the living sector, we are seeing real signs of continued emergence and growth in some of those more nascent subsectors around living, and we expect that to continue. Finally, data centers continues to be a really big story. We have a very positive outlook there. I think when we look at key areas of demand across key European markets, not just the traditional areas of growth, but also some of those emerging data center markets across Europe, we expect to see much more of that in 2026. After many years of restructuring in that asset class, we're seeing increased investor interest, and that's coming through into the volumes that we're seeing in key markets like the UK, also Germany. I think if we look ahead to the hotel sector, again, continued positive fundamentals. Over in the Middle East, we expect to see a lot of growth there, and we've seen a lot of focus there and that market expand across sectors, and we expect much more to come in Saudi Arabia and in the UAE as we look ahead. So lots of opportunities right across the sector mix in 2026.